Welcome to Kenton's videos. Enjoy the video.
You start by confirming eligibility and gathering documents because the bank verifies them first. Check your credit score and income stability, then assemble ID, address, salary slips, 6 months bank statements, and tax returns. Once done, get the property title and preliminary agreement ready. Valuation and title clearances speed approval. If you're self-employed, include audited statements and GST where applicable. Make sure documents match exactly to avoid delays. This first step prevents common rejections and moves your application into processing promptly. You now complete the application form and submit documents either online or at the branch. This is where accuracy matters most. Provide clear scans, pay the application fee if required, and authorize property valuation and KYC checks. Once submitted, a relationship manager coordinates background verification and may request supplementary proofs. Respond quickly to avoid holdups. Keep originals ready for physical verification. Make sure contact details are reachable, because timely answers cut down processing time and help you move to sanctioning faster. You finish by reviewing the sanction letter carefully, check interest rate, tenure, EMI, prepayment charges, and processing fees, because signing commits you financially. After acceptance, sign the loan agreement and complete mortgage registration. Submit post-sanction documents the bank lists. Once formalities clear, the bank disburses funds per schedule to the seller or your account. If disbursal stalls, contact your RM immediately. Common fixes include clearing a missing document or paying a small outstanding fee. So prepare that contingency to avoid further delay.
Thanks for watching. Consider subscribing if we helped you.